Where does this decision actually leave the central bank and the new person in charge?
At a very difficult place, to say the least. One of the reasons President Erdogan removed the previous governor, Murat Çetinkaya, was that he was refusing to lower interest rates, presumably as quickly and by big rate cuts as Erdogan would like him to. But the problem is, by removing the central bank governor suddenly and appointing a new one, Erdogan may have unleashed a new period of financial volatility in Turkey. So if the lira continues to decline, just like it did earlier today, it might actually force the new governor, Murat Uysal, to possibly delay or pause on the easing cycle.
So, Onur, are we now more likely to see a rate cut?
That's the question. We were very likely to see a rate cut later this month if there was no management change at the central bank. But now that there's a management change at the central bank and some investors are bracing for a possibly bigger and quicker rate cut than what would be warranted by inflation decline, it might actually be more difficult for the new governor to cut the rates, which is probably what President Erdogan would like him to do. So it's a very tricky situation.
Yeah, it is very tricky. It's been tricky for some time, you could argue. So what's the political context here?
Well, Turkey has been what was in a recession earlier this year. It's first in a decade. And with the recession and rising unemployment rate, we saw some erosion in Erdogan's popularity base. He, in fact, lost quite a few major cities in an election earlier this year. And in a rerun, he lost Istanbul, Turkey's biggest city, by a huge margin. So there's clearly a political backdrop that is forcing Erdogan to provide some kind of stimulus to the economy. And he may be thinking that lowering interest rates or asking the central bank to lower interest rates might be a better way than just trying to provide fiscal stimulus.